Good morning, good evening, or good afternoon, whatever time of the day it is that you are watching this. I am going to kick this one off with a little self promotion. Get on over to Twitter, give that little follow button a little click. Follow us over there at My Options Club. Little self promotion only because, what the fuck, man? It's only one little click. So go ahead and get that done. And wow, I'm loving it. I'm loving it. I'm loving it. I have just had 4 days of nonstop rain. First rain of the rainy season. No typhoon, just a little bit of a low pressure. And man, I tell you, I'm over here and I am sleeping with a blanket. It's so cold. I'm loving it. So, all you guys over there and you're, you know, getting all that heat, don't worry. It's coming. You'll cool down. So, I'm going to focus mainly on the SPX only because it's the bread and butter, and I'll zoom out later in the day to a couple of those avalanches that took place there on Friday and the two big names that we got reporting this week. So last week, 111 points from the open and the close, 137.84 range. We did go and fill that gap that was from way back in April 2022. Filled it, done, complete. There is one gap above, and that gap is a little bit higher than the March highs, 46.37, which I will speak about. You know what? We'll just go ahead and speak about it now, since we're here. Look, man, I'll bring you into the full moon thing and the whole discussion about it in a little bit. In fact, fuck it, we're here. We'll just do it now. Full moons, right? People have asked, what is this full moon that you discussed? You know, when is the full moon? What happens with the full moon? I've actually got to update this and put the little low because I've got the COVID one here. Anyway, you can go back a year. You can go back 2 years. You can go back 4 years. You can go back 8 years. You can go back 16 years. And go and put a little dot. It's up to you what color or gender, or if you want to make it non-binary. Completely up to you. And put a little dot where the full moon is on the date of the full moon. And you can look plus or minus 3 trading sessions. And the only one that you will find that did not actually fit for a full moon happened right here in October of 2021, which many of you remember that we're trading over here in October 2021. That bullish fifth wave that we were talking about, and we blew off, and that was the trend also that we referred back to when we were having those multiple consecutive weeks going back before multiple consecutive days, coming back to here in October into November, which went actually all the way up until Thanksgiving, although the streak ended right there on November the 5th. That's the only full moon that didn't fit for a top or a bottom. So with that in mind, we will bring you in here to the zoomed in version. And again, your full moon was dead spot on over there in August on the top. Same thing over here in September. CPI came out the next day. We had that big gap down. Right over here on your October lows, right there. Fits right here into your November lows, the full moon. Same thing here over in December, where the full moon came in, and then you went a couple of days after that. I believe it was 3 days afterwards. We put in that FOMC spike, 4,196, and then we cruised on down. Here was your full moon in December, a couple of days off from where the actual bottom came, or January, whatever it is. January was here, and bam, dead on the spot on February. Dead on the spot almost to the date over here on March. And then we come into April, okay? April looked as if it was going to be the top there again, and then all of a sudden the word CPI started to come out later in the month as we went into earnings, and we cruised above that 41.55, broke it for a day over there at the last day of the month after Amazon, Microsoft, or Amazon and somebody else reported on that Thursday. We broke 41.55 and we cruised back down. And again, it looked as if maybe there was a fractional chance that that would also fit in to be our top, but it didn't. April or May 5th, May 3rd, whatever the date is, it wound up being our bottom. Same thing over here when we were in June. In June, we were looking for it as we were hitting this resistance trend line of the channel to be the same exact thing. Perhaps be our top and be able to get a decline, which is way overdue. Didn't work out. Wound up being the bottom because we broke above it, broke above the previous high, and we cruise into July. July, the exact same thing has just occurred. It's just occurred, and now that's going to bring us into what we want to discuss here. For the month of July, we have a 132-point range. That's our month right now. 45.27 and 43.85. That's the month of July. You go back and look at prior months. June, major blow-off month, 286. Fit into the SPX range. Month prior to that, in May, only 183 points. As you remember, back when we were in May, we were in that very, very compressed zone. Trading here constantly, fractionally below that 41.55, fractionally above in the middle of the month, dipping below, coming back up there, and that was when we entered into the 4200s. Again, wrong one. 182 points is all that we were. Go into April, and it was the worst month because it was 120 points. Spreads kicked ass. That entire month of April, spreads were rocking. We were using that 41.55. We were using that 41.36. Absolutely rocking on spreads. And then all of a sudden, kabam, we break out and we go into May. And even though that we were into May, the spreads were still fantastic in May. And then you started getting into the rollovers, which is one of those things you got to discuss individually. But here we are again, having now broken to this point where 43.85 fit very well for a full moon, as did 44.58, right in line because July 3 was our full moon. Now we've broken it. So now we need to, specifically due to this, and because we have earnings coming up, be very open-minded that another 100 points, 150 points, bring us into that 230, 250 point range for the month, and 45.27 with another 130, 120, 110 points. We're right there at the March of 2022 highs. Gotta keep that in consideration that we are literally looking right there, right at that point from that March high over here. 46.37, we're fractionally off of it. We'll discuss a little bit more about that, but as of right now, this needs to be left with an open mind, despite that we are up 18.86% from the March lows, despite that we are up 29.38% from the October lows. This goes into that rebalancing of what's taking place over there on the NASDAQ later this week on Friday. Prior to their earnings, they're announcing their rebalancing based on the weight that these guys are on. Price preservation to preserve the NASDAQ so that when you get these intra-day 5% collapses on NVDA, it doesn't hurt you when they do have their proper pullbacks. So, green, finished on Friday red. That's why your email went out there talking about how we were going to have a red Friday, and that's the same reason why over in the spreads, you had the trade there for the 381, 380 calls on the QQQ. QQQ went well above that. You got a much better credit. And the same thing over here on the SPX. You've got your, not going to get 5 green closes, 45.15, 45.10, 350 credit at the time. 4 of you have told me that you got over $4 credit. And you end the day 45.05.42. So the credit itself winds up going completely full credit in the money, 233% from 350. Those that got $4 are looking at a 400% return. That's the way it works, and that's the way we like it. Now we're heading into Monday, and that close on Friday was not good. Not good in the sense that we went up here and we start running, and then we wind up closing red after posting a new high. That is not good. However, you are far from being in trouble. Daily, sure, you do have a divergence over on the daily. How about your 4-hour? Yes, your 4-hour got into that extremely overbought zone and had a little bit of a pullback. And that's the problem with these stretches, is very, very easy to oversell. Over here, we oversold the 4-hour when we were coming down into that dip at 43.28. Fractionally 120 point drop. That's all that was coming off of that middle of June spike, 44.48. Not magnificently large drops. One thing I will bring into mind is we are above the 5-day, the 10-day, the 20-day, the 50-day, the 400-day, the 100-day, and the 200-day. Now, when you do get overextended like this, your dip typically tends to end at the 5-day moving average. So as we head into the beginning portion of this week, that is something that must be kept in mind for those who are trading it. Coming to a wider point of view, and again, having shifted back there in the beginning of June, seeing what I looked at as this is definitely a blow off top, I've shifted over into the bearish view, and the bearish view being having broken above 43.73, the bulls believe it's over. There is never going to be a drop again. It's over, because that would have been the perfect A equals B equals C. Doesn't need to work out that way, as I can show you back on that other chart. Did I have it here? No, I have it on a different chart, which I'll show you. This is where we're at with this channel, or call it, trying to form a channel, having broken out over here in June, dipped down and below it, started fighting around the inside of it, and then again here, having broke out above it from that July low that looked as if it would have been a perfect full moon bottom right over here at 43.85. So the way I'm looking at this now, having not really thrown in another calculation coming off of this 43.36, you're looking at close to around 190 points to the upside here, which fits for me looking at this as being a completed bullish wave 3. The Fibonacci extensions for the 1, 2, this being the 3, having come up to the 261 at that 45.13. You've also come up to the 76.4 retracement, or 23.6, however you draw it, from the entire drop of 2022. So there are multiple reasons to suggest we have undoubtedly hit the top that we were looking for, and now we should begin a very strong pullback somewhere into the range of the bottom of this channel, understanding that we've not tested this channel or this support line that was created off of our May lows and the March lows. So a lot to be discussed still, and a lot to be seen and proven. But we've got our 23.6 retracement going back to the March lows over here at 43.58. 50 retracement going down here to that recent low coming over here at 41.06. And you've got your 50 retracement going down there to that 40.48. So a lot to be tested, a lot to be proven. But from a view of this in multiple different fashions, this should have topped. And what we are due to receive as we go into earnings, which can't replicate the AI pump that they already replicated, so that they can mask not having good revenues and not having good balance sheets anymore. That's what could start to occur. We won't know that until we get into next week, not this week. This week, all we have is Tesla and all we have is Netflix. The following week, we get some bigger names and we have the FOMC meeting, which is already written in stone. We're getting a quarter-point hike. So this is what we're looking at for the near-term zoomed-in version, coming off of this recent dip that we had when we went back here to 43.28 and created that one gap at the very end of June. Tiny little gap down there. Then you had your big spike up gap that you had here at the very end of June, that June 30th, which could have gone either way. It went the positive way. We've got a gap over here from Wednesday. We have a gap over here from Thursday. Now, 41 points of that 137 points last week was unfilled gaps. So these are where the zoomed in view would be for the course of this week. And should we fill the second gap, the gap from Wednesday, that's a 2% decline from the current 45.2776. 2%. That's, coming over here, seeing a 2.7% drop, zoom out a little bit more. You had an almost 1% dip over here. Bring it back even further. You had a 1.5% dip as we were here in the early part of June. 2.5% dip over here at the end of May. 3%, 3%. We're not getting these greater than 3% drops. So 3% being just below 4,400 as of right now, that would be about the maximum that I would be expecting, would be a drop down to the round near this 3%, where 44.23 starts to fall into play, or 44.28. And again, this being where our June spike bottom, the gap that was there, started at 44.22. We filled that gap. That would be around the lowest that I would be expecting as we go into the next 2 weeks, would be around that 44.22 area. Once this gap gets filled, it is very, very, very likely. Let me repeat that. If this gap gets filled, it is very, very likely that we are going to be oversold. And as we've shared for years and years, you can be oversold, you can be overbought for days, for weeks. You can have sell divergences. You can have sell signals. Market moves down when there is a Y. You get overbought or oversold, you got 15 minutes of life down there. After that 15 minutes, market's going to bounce no matter what, because you're playing a video game, you're playing a bunch of computers. So again, spreads, we'll have them. Don't have a question with them. Been hitting a nail on the head all month long with either risky trades or safe trades. VIX, we need to pick up, but as for now, we're still able to pick up some good money over there on the spreads. The QQQ, 34% from the March lows. 34%. We ended on Friday up 40% on the year. Boom! Actually, this is where you cue the woman on the plane, where she comes out and says, "I don't give two fucks. That motherfucker there, he ain't real." That's the QQQ. That shit is it's so ready to implode, but you're not going to get it to implode until it decides that it's ready to. And this week, we get Tesla. Now, this is a wide view of Tesla, like I've shared, and this is also, I can bring it down to 2 years. This is also that trend line, which is paid twice. Paid last week, paid this week, playing on the spreads. A lot of gaps. Oh, a lot of gaps. However, Tesla has its own AI. And the AI that Tesla has is the Cybertruck. And last week, or over the weekend, the first Cybertruck came off the assembly line in the Gigafactory over there in Texas. 313 is undoubtedly within reason when they come out with their earnings on Wednesday. No question whatsoever. This 313 is screaming that it's going to be showing up here on Wednesday. Now, would you play the calls? I damn sure wouldn't with the price that they are, because Tesla will have to hold that 313 on Thursday morning. And on Thursday morning, you're only going to have 2 days left. So the devaluation after earnings on those, you would need for Tesla to be up in the 320, even this 340 area, to get any kind of payment on anything in this 310, 300 range playing the calls. You need a big move on Tesla, well above that 313 to get paid on your calls. So for me, I'm much more ready to go and let Tesla do their earnings, come out with it. I hope they go to 313, and then we can play the short on the way down and the fade off. The other company that you have reporting this week is Netflix, and again, from a big wide view. Unfortunately, too much detail on that one. See if I can go to a cleaner one. Not the email. I think it's the banner. And the banner it is, nice and clean. 485 is your major pivot here. It's your COVID earnings spike. I don't know why, but it worked. It worked a lot. This is your gap that is unfilled from all the way back there in February, from whatever the fuck it was that they reported. And then you had your gap over here back in April from whatever the fuck it is that they reported. They dropped 76.4 retracement, or the 23.6, whatever you want to call it, to their all-time lows. They were down 75% from their all-time highs on this drop. So, of fucking course, it's going to get bought. And over the course of these months, since May of last year, it has been on a nice, steady climb. It's now made it back to the 50 retracement from the all-time highs at 431.85. And this unfilled gap is still sitting here, which fills at 508 and a quarter. Again, the same thing with Netflix. I would not be inclined to be playing the calls while expecting that this is going to be breaking above 500 on their earnings on Wednesday. Instead, I would be hoping to see Tesla or Netflix get up in the 500 range to be able to sell call spreads on it and or play the fade, which the Netflix fade has been fantastic. So I bring you and leave you with the biggest fake penis that has ever been created. I bring to you NVIDIA.
Let's just do this.
Get the fuck out of here. This is like pulling your pants down in front of one of those circus mirrors and looking like that meme from fucking Pornhub. Unfucking believable, this. It's now become a revenge trade for a lot of guys that have been burnt. And at the same time, it's also become a, dude, we're always fucking going up, FOMO trade. And I bring you out to the wider view, and this blew me away, where I drew a line coming here off of the 2018 highs before the crash, and then the highs over here in November of 2021 before the crash. And the thing almost cleans out. Now, I'm not a trend line guy, but when I see something like that, same thing like I showed over on Tesla, I start getting all giddy, because, oh yeah, fuck you, I'll sell you as much as you want, because you get stuff like this that you had here on Friday. Friday, you come out here, opening bell, oh yeah, here we go, oh fuck yeah, and look where you hit. You wind up hitting not only that trend line, but you also hit a big retracement. I don't know what the fuck that is coming off the COVID lows, but I got it drawn. And ba-boom. Greater than 5% drop intraday.
Ah, shit, fuck me, shit, what the fuck, I don't fucking know, fuck, stop screaming, stop.
Intraday. So it shows there's a lot of weakness out there is basically what it's trying to do. Here's your 30-day. You're up 110 points 30 days. You got gap, 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 gap. I mean, come on. It's enough already. So the last one I can leave you with is Meta, which in my opinion, Meta has now been destroyed and deleted and eliminated from the face of the earth with what Elon Musk is doing over there with Twitter by actually paying the contributors on Twitter who can also be paid by everybody that the way that they have their business model over on Instagram, where you get sponsored, you get liked, you get looked at, you get your titties tickled, whatever the fuck it is. 1 year's not going to do it. Look at that again here. Come on, man. Where's John Wayne Bobbitt's wife? 3 year. And again, that's the gap that needs to be filled, the metaverse. It is very fucking clear that his Threads is dead. Thank God he didn't use a lot of money on it like he did over on the metaverse, because all he had to do is copy the code from Twitter. But it's dead, dead, dead. So all of these gaps one day down the road in a couple of years will wind up getting filled. But again, when you start looking at stuff like that, and here we are at 300. So for shits and giggles, I will leave you with this. Let's just go over here and look at Meta. And we will go over here and look at the December 25 150 puts. Let's look over here where there's volume. The December 2025 185 puts are $15.90. Let's go over here and look at the December 2025 300 puts are $57. Let's look where $57 is. There's $57 right there. $258. No. There's $125 for you. Right there, right to the March lows. I can't do the meta thing. So anyway, again, because of where we are and the way that this has kind of evolved itself over the last couple of weeks, studies, edit, remove, 400 I'll leave, the 100, the 200, the 50. I'll leave the 50, I'll remove the 400. Again, you're not going to break down below the 5-day moving average. That's just the way that it works. So your 5-day moving average right now is going to continue to move up. That should be any kind of a dip that we have here on Monday. You will break the 5-day moving average with a gap, which very possibly could come on Tuesday. And because we did get a red close there on Friday, we've got to be very considerate of that, because should we get a red close on Monday, we need to be considerate that it is possible that we might get another one on Tuesday for tacos, but we are starting to run a streak. And again, what is the most aggravating 1, 2, 3, 4 weeks? Out of these last 4 weeks, we have traded above 37 points, 36, 35. We've only traded above 40 points twice in the past 4 weeks. And that's what's compressing your VIX. That's what's making things very tight, very difficult. But it's very clear here, as you can see over the course of the last week. 22 points, 35 points, 25, 28, 28. Anything that you're playing 0 DTE on, playing the calls or puts on the SPX or SPY, you cannot put an aggressive amount of money on there, because you're range bound. You're stuck. So you're stuck playing the lottos that go here, lottos that go there. Now, when you come over onto the individual stocks, a little bit of a different game, because like with Dallas or Delta Airlines, DAL, that I gave out in the middle of the week, 50-cent increments. Greater than 2,000% decline over there after earnings, down below 46, closed at 46.68. NVDA there on Friday. One of those ones that, again, because people jump all over the place, ticker to ticker to ticker to ticker to ticker to ticker to ticker, you don't get the chance to pay attention to your bread and butter. Your bread and butter should be the one, should be your spouse, non-binary. And after you know everything about your spouse, you go and find your non-binary outside of your spouse partner that you can tickle around with every so often, but you know their personality, you know how they work. So I leave you with, we are heading into OPEX week, options expiration week. Options expiration week, well, you've got it, as everybody knows, is a bitch of a week. As we had it back here over in June, that was where we went green, 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 green. And we knew again that we would be closing red because we're not going to get green all through the week. It was our longest streak of consecutive green days since that October, November 2021. 6 in a row. We just came here off of 4. You had that red Friday there on June 16th. And again, because data will help you make money more than your thoughts. The 4430, 4425s looking for a red close because we had that super compressed VIX. You only got 100% on it. So have a fantastic Sunday. Have a wonderful afternoon, evening. I'll see you guys all Monday morning.